4 months ago, I let the Look into Bitcoin subscribers begin controlling my BTC investments. And now it's time to compare our social investing strategy to some benchmarks to see how accurate investor emotions really are. Today, we're going to be looking at how accurate you, the viewer, Twitter followers, just all the Look into Bitcoin content and viewers in general actually were when it came to actually controlling my money. If we scroll down here, we can see this tweet thread followed by a video that we posted at the very start of 2024, outlining how through a number of Twitter polls and YouTube comment sentiment, we were going to actually let social, emotional bias at that moment in time control whether I was going to accumulate BTC or begin profit taking. Now we can actually look at the results after multiple months of doing this to see maybe how we did. So here we're just on TradingView, and this is the first purchase I made. It was just at very early January. Put the initial Twitter poll out whether we should buy Bitcoin now or wait for a dip. First and foremost, we actually bought BTC, which wasn't bad. Looking back now, as prices over $60,000 and we've made new all-time highs. This was at around $45,000, so not a bad purchase at all. But if we continue scrolling, we can see once again a week later, we bought more Bitcoin. A week after that, we bought more Bitcoin. So things were looking pretty good. We actually hit this local bottom here beneath $40,000. And once again, we actually bought more Bitcoin. So all the signs were looking very positive. Next, we actually decided to sell. And this was at a bit of a loss because we'd actually accumulated for the 3 weeks prior at slightly higher average entry prices. So this was actually a bit of a loss on the position. But, you know, it's just the first take profit we actually had. It was just that it was then immediately prior to a $10,000 run up. So then we bought at the peak, and then a few days later, the next week, we actually sold again at a lower price. So that's 2 losses in a row. We're in the middle actually. After this big run up from $50,000 to the mid 50 towards $60,000, it was stagnant. So I didn't do anything. I didn't take profit. I didn't buy Bitcoin. And then a week later, we bought even higher. And then a week after that, once again, we actually took profit on the position to sell once again at a loss. And at this point, Bitcoin's price had actually increased over 50%, and our social investing strategy had lost money. So at this point, I went on holiday and I thought, I don't actually want to lose any more money during the bull cycle. So I know it's premature, but I've actually called it quits on this social investing experiment because, to be honest, I think after only 4 months, we pretty much have all the data we need. So just scrolling out here, if I just frame this chart a little better. From the initial purchase to the final time I asked, Bitcoin's price had actually moved up about 42%. However, at the last opportunity we had to actually maybe take profit at a higher price, the Bitcoin price had moved at about 50%. So we'll say baseline, first opportunity, the best opportunity to potentially the highest price, we could have seen a 50% increase in the Bitcoin price action. And during that time, every single week, as we outlined in this video, I was actually using a few baseline strategies. So the first was just a very simple dollar cost average. Every week, I was just going to buy $25 of BTC. And initially, I bought a little bit more than that just so it all aligned. But we can actually see that dollar cost averaging throughout this time period actually returned 24% profit. Now, this isn't completely accurate here on the Look into Bitcoin site because we can only start from 6 months ago, but I can tell you from my own investment account that is a 24% increase in profit. And if you actually subtract the dollar values from the initial value here and compound the Bitcoin purchases starting from the start of the year, you'll find it actually aligns to the current price at 24%. So about half that performance of buying and selling at the most opportune moment of just buying and holding potentially, but still not bad, especially considering we were basically buying at the very bottom and then also buying throughout the top. So slightly underperforming buy and hold in this circumstance does make sense. But we did have 2 other strategies we were running. And the first was actually the active address sentiment indicator. Now, this was based on a strategy we came up with a few months back, which was the Look into Bitcoin strategy, where we would actually accumulate BTC under the investor tool or the 2-year moving average when we had an active address sentiment indicator cross. Just for this example, I only used the active address sentiment indicator because we were so high above the 2-year moving average. I wanted to make sure that it was a bit of a fair competition, that we had enough signals. So again, if I just zoom in over the past year we didn't get many signals actually. We only had a handful down here, but I was actually running this on the 4-hour time frame, like I explained in this initial tweet here. The Crosby ratio, which the other one was also being run on the 4-hour time frame. So we could see we only had 3 purchases actually on the 4-hour time frame of the active address sentiment indicator. And we go to portfolio tools, I've already mentioned it, but if we go to key reversals and Crosby ratio, we can actually see that this was the second strategy I was running. So again, on the 4-hour time frame, so the look into Bitcoin data isn't going to be 100% in line with the purchases we made. But if you have access to the TradingView indicators through a look into Bitcoin site subscription, you'll see that again, we actually had multiple purchases through the Crosby ratio. And if we go back to the chart here and just hide all these depressing buys and sells at the worst moments, we can see between those dates from the 1st of January up until the last sell we had here, if we just hide them again here, we can see that the Crosby ratio, if I just line this up, actually returned 19%. And this is a little bit skewed because we actually had a few purchases. So if we were looking to today's profit, it would actually be slightly higher than this, but overall 19%. So definitely not too bad, especially also considering that this was a very low drawdown strategy. We were actually purchasing way down here as Bitcoin's price was bottoming out and taking profit all the way on this run up. And remember, this is on the 4-hour time frame, so this is going to give much more frequent and potentially not as accurate bottom and top signals. But like we said, we wanted a few more active signals to actually make some trades on. So 19% not too bad. But the active address sentiment indicator, like I said, on the 4-hourly time frame gave us a few more signals. Gave us 3 buys and 3 sells during that time period for a total percentage gain of 59.82% before fees, which is pretty extraordinary, really. It timed all 3 purchases pretty much just before the run up to 60,000 and was taking profit all the way throughout this local high we set. So it really massively outperformed. But really, I think the biggest, not surprise, being the outperformance of some of the look into Bitcoin metrics. I think the biggest surprise is the underperformance of the social investing strategy. And really, it shouldn't be that much of a surprise. In the first initial video, I did explain how through multiple metrics, the fear and greed index, the funding rates, we can see that retail are wrong almost all the time. And if we go to the fear and greed index here, it actually lines pretty nicely when we see the fear and greed index dropping with when social sentiment indicated that we should be taking profit. And when everyone was getting too greedy, that was actually when we were buying more, when really we should have been doing the opposite. So this was a really good, fun, live forward testing experiment to really show how bad investor emotion really can be and to really solidify the fact that you really need a solid strategy, an unemotional plan, void of biases to really improve your Bitcoin trading and investing. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we discussed today, as well as the many more that are all available on lookintobitcoin.com, your number one source for Bitcoin information. So just to summarize, since the start of 2024, as part of a social investing experiment, Look Into Bitcoin Twitter users and YouTube viewers have managed some of my BTC capital to try and time my buys and sells to outperform the market. And unfortunately, the social investing strategy had negative returns over a period in which Bitcoin had increased over 50%. And dollar cost averaging was our other baseline, along with the Crosby ratio, which both massively outperformed negative returns and had much less drawdown than just buying and holding due to the fact it was timing those purchases a little better, but ultimately it didn't outperform buy and hold. However, the active address sentiment indicator did outperform buy and hold with considerably less drawdown as well, which really reiterates the fact that acting on investor emotion is one of the worst strategies you can have with your Bitcoin trading, investing, and analysis, and having a solid, actionable, unbiased strategy really will help you to outperform a vast majority of the market. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools like the Crosby ratio, in-depth industry reports, live and personalized indicator alerts like we've seen on TradingView, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on this social investing strategy. Were you one of the ones that were actually telling me the right things to do? Do you think that just a mass general consensus is usually wrong, but maybe you have a little bit of an edge in the market? Maybe you were using a strategy somewhat similar to mine to maybe outperform what most people were doing during that time period. But like I said, if there's any other social investing experiments, any other strategies you'd like to see in the future, let me know in the comments. I look forward to reading and replying to all of them. Thank you all very much for watching, and I'll see you in the next one.